Hey everyone, this is Congressman Rodney Davis. I am in my office in Washington, D.C., and I am happy to be joined today by my good friend Scott Hodge with the Tax Foundation. The good thing about Scott is, and why I wanted to bring him here, is he's actually from Illinois. He was born in Moline, grew up in Glen Ellen, University of Illinois at Chicago graduate, and for about a year or so during that growing up process, he spent a year living in the 13th District as a student at Parkland College. Scott, welcome, and please tell us a little bit about you and the Tax Foundation.
Well, thank you, Congressman. I can't tell you how much fun it is to be here and be part of this. And yes, I am an Illinoisan. I still, even though I've been in Washington now 30 years, believe it or not, I still feel like I'm an Illinoisan. I think once you grow up in Illinois and you have that culture in you, you bring it with you. And it's all of those values that you have growing up in Illinois still carry over today. The values like free markets, fiscal responsibility, all of those things. And I've worked at a number of think tanks here in Washington now 30 years, including the Heritage Foundation originally. But I've been running the Tax Foundation now since 2000. And the Tax Foundation is kind of an interesting organization. We actually just celebrated our 80th anniversary last year, which was fortunate because it happened also at the same time that you and Congress passed fundamental tax reform. So it was pretty exciting for us, all the years in my career that I've been working toward fundamental tax reform, and we finally got it done. So it's an awfully exciting time for me.
Well, the last time Congress did comprehensive tax reform was 1986.
Yep.
And at the time, you were helping to start the Heartland Institute in Illinois, in Chicago, that my friend and former colleague Tim Huelskamp is now a part of.
Very exciting.
You were working to reform the tax code back then when Ronald Reagan was president and Democrats controlled the House and the Senate. We saw bipartisan support for a tax package while I was cruising the square in Taylorville in my Bronco too. Never thought when that would have happened in 1986 that as a high school sophomore I didn't pay attention to, that the tax code would grow into 70,000 pages since then. But there were times when you were out here in Washington where the tax code shrunk and we made tax reform. And one of those times was during the implementation of the Contract with America. Give us a little history of how you helped devise the Contract with America, why tax reform was so important, and then how you moved into tax reform in the late 90s and how you did it with a Democrat president. I mean, it's bipartisan.
That's true. What's interesting is that, unfortunately, the 1986 Tax Reform Act was undone pretty quickly within a couple of years. First was, unfortunately, with George H.W. Bush in 1990, and then, of course, the Bill Clinton tax increases, which raised top marginal tax rates on individuals, increased the corporate tax rate, and did a number of other things. And in response to all those tax increases, I was working at the Heritage Foundation at the time, we found that it was really important to bring together people in different viewpoints. We brought together family groups that were in favor of pro-family tax cuts, supply-siders who were in favor of cutting the capital gains rate, people who were worried about the deficit and wanted to cut spending. We brought them all together and put it together into a package called the Contract with America that favored cutting government spending in order to pay for tax cuts for families, the $500, then $500 per child tax credit, cutting the capital gains rate. All of that was put forward and put into a package that Newt Gingrich and others put forward on the floor of the House, passed eventually in 1997, and from there we saw the economy start to boom again, largely
that was
because
the Balanced Budget Act of 1997.
That's right, yeah.
Wasn't it a time of complete partisanship, disharmony? I mean, weren't Bill Clinton and Newt Gingrich fighting over where Newt sat on Air Force One just a few months before that? And then all of a sudden, they come together and they get the Balanced Budget Agreement in 97. And correct me if I'm wrong, didn't the Congressional Budget Office at the time, before the Balanced Budget Act of 1997, project, just even hours before the bill passed, deficits growing for the next 10 years?
As far as the eye could see. And then within months, they were all of a sudden worried about the deficit was going to go away, and how were we going to set interest rates without federal borrowing? It was crazy.
So they were afraid that we would have no deficit.
No deficit.
And how the Federal Reserve was going to set interest rates.
Right.
My.
Yeah, how things have changed.
So give us the result of the Balanced Budget Agreement in '97. what worked, what can we compare this recent bill to when it comes to past history? How do we know that we're going to be able to have the sustained economic growth that economists like Stephen Moore, University of Illinois graduate, say that we can achieve with this fundamental tax reform bill that we passed?
Well, of course, the core of the 1997 Act was that $500 per child tax credit, which is now, under the current bill that you just passed, going to be $2,000. So
partially refundable.
And partially refundable, so that a family, let's say each of the couple is making $20 an hour, they can see their tax bill cut by more than $2,000, which is a lot. And
explain to my constituents what that partially refundable means compared to the current tax credit. Currently, they can get the tax credit when they file their taxes the next year. But what's that refundability provision mean to middle income and lower income families with children?
So let's say you're doing your taxes and you've done all of it, and you realize you owe $1,000 in taxes. But because of the child tax credit, you reduce that tax liability from $1,000 to $0. Now, when a tax credit is refundable, that means that you get the full amount of the tax credit, even if your tax liability is $0. So if a couple has 2 children, or even 1 child, that $2,000 gets deducted from their tax bill, but they get an extra $1,000 refund above and beyond what they were originally going to pay. So this is a great thing for a lot of people who are right at the margin. You know, you're struggling with your bills, and you get that extra check. That's going to make a big difference for them.
Well, and I agree completely, and that's why I've always said our focus has been, in writing this bill, our focus has been middle income and lower income families in central and southwestern Illinois, the areas that I serve. Now, there's a lot of talk out there from all sides on who are the biggest beneficiaries of this tax bill. And you hear the talking points from the Democrats saying this is nothing but a tax giveaway to the ultra wealthy. I look at the facts and figures, and I don't agree with that. I think it's going to middle income and lower income families because of provisions like you just mentioned, with the child tax credit being doubled, the standard deduction being doubled. Explain to me who's right.
Well, let me give you one indication. One of the more liberal think tanks in town, the Brookings Institution, has a tax group. They estimate that this tax bill will knock more than 4.5 million people off the tax rolls. So instead of being paying taxes, now because of things like the child tax credit, they won't have an income tax liability.
We've lowered all the income tax rates so they can make more before they have to pay taxes.
Exactly. And so that is a net winner for a lot of low-income people. And you hear so much of the rhetoric about this being tax cuts for the rich, but in fact, so much of the tax relief is aimed at low-income people. Now, but let me preface this by saying one of the key elements of this tax reform plan is business tax reform, particularly cutting the corporate tax rate, improving a lot of the tax treatment for employer-owned businesses, what we call pass-through businesses. This is really important for promoting economic growth. We have to remember, the United States, up until this act was passed, had the highest corporate tax rate in the industrialized world. That made our businesses uncompetitive globally. It made foreign-based companies more competitive. So by cutting the corporate tax rate, instantly, we have one of the most competitive tax systems in the globe, which will make our companies able to compete better abroad. But more importantly, it makes it better for them to invest here in the United States.
Wait. So we've closed that so-called loophole that many of us had campaign commercials run against us saying we're in favor of shipping jobs overseas, so that doesn't exist anymore?
That's right.
So wait a minute.
We've made the U.S. a good place to do business in and do business from.
So American companies that have been shipping jobs overseas now have the incentive to keep jobs in America because of the territorial tax system that we've created here. Now, and I agree, rising wages and job opportunities are great for lower income and middle income families. The American dream is to be able to go get the job that you want at the salary level that you deserve. And that's exactly what we have when we have a good job market. Back to the individual side a little bit more, though. Explain the importance of closing some of the loopholes, like that one that you just mentioned on the corporate side.
Yeah.
But even on the individual side, part of the benefits of this tax bill too is simplification. We believe that instead of the 75% of my constituents, and really 75% of all Americans that don't itemize under the previous tax code, just the one that you're going to be using to file this year's taxes later this month or early next month or in April, we believe because of the simplification, 90 to 95% of my constituents will be able to do their taxes on a postcard or a postcard-like single sheet of paper. Explain the importance of closing these loopholes.
Well, there are two impacts. One is obviously the simplification, the fact that people don't have to worry about all the complexity. They don't have to worry about getting audited. They don't have to worry about all the paperwork, all the receipts, all of that stuff that they used to have to worry. Now they file that simple tax return and they're done with it. What a relief that is for most people. But there's also the improvement in the economy and the performance of the economy. See, the more loopholes you have in a tax code, the more you have the tax code dictating economic behavior. Dictating my behavior as a business owner, as a person, we start to wrap our lives around the tax system. That creates inefficiencies. That slows economic growth. And when you eliminate a lot of these things, you actually make the economy more dynamic. You get rid of the micro tax behavior that really slows the economy. And I think we're going to see, in fact, we have a macroeconomic tax model, a dynamic tax model, and we analyzed this bill. We found that it would boost the long-term size of the economy by about 1.7%, create about over 340,000 jobs, about 14,000 new jobs in Illinois, and boost wages across the board. That's what tax reform is all about. It's about increasing the productivity in the economy, which leads to higher wages and higher living standards. That's the ultimate goal. It's not just about putting money in people's pockets, that's okay, but it's about improving their long-term living standards, making everybody more prosperous.
So making everybody more prosperous, you talk about economic growth projections.
Yeah.
What do you anticipate? I mean, what multiple economists have different viewpoints.
Yeah.
Who's right? And what do you think is going to happen as we see this new tax bill implemented? We see these simplified provisions come into place, the closing of the loopholes on the corporate side, making sure our small businesses, our hometown, town square small businesses that make up communities like my hometown of Taylorville and Moline and Glen Ellen, where you grew up. How are these provisions going to affect economic growth in your opinion?
Oh, one of the key provisions here is what we call full expensing of business capital investment. What that means is that if you're a business owner and you buy a new delivery truck, you buy new...
this isn't just the Caterpillars and the ADMs in my district.
Right. This
is the local shoe store. This is the local internet service provider.
Printing presses, dry cleaning services. All of these people are
garbage trash haulers.
Exactly. All of these people have capital investment. It's what makes them do what they do. That's their business. Now, when they purchase that new equipment, they can write it immediately off their taxes. What that does is it incentivizes to improve the kinds of capital investment that they have. That makes their businesses more productive, makes their workers more productive, and ultimately it increases economic growth because all that new investment leads to higher productivity and higher economic growth.
So it was below zero this morning when I took my trash out. I've got teenagers at home, so I usually have a lot of trash.
Uh-huh.
So my sanitation service, Cleaton's, in Kincaid and Tovey, Illinois, sorry about that, they're able to make capital purchases that allow more routes and more employees to even be hired in our small communities. So that's about economic growth right in middle America, right in small towns throughout central and southwestern Illinois. That's what I'm glad you said that, because we got to make sure that we let those small business owners know this is a benefit for them. Talk to your tax advisor, talk to your accountant, figure out how you can go make these capital investments, and then in turn invest in people, because that's the key to growing jobs and also growing our communities.
And you can see how this ripples through the economy, because the more people need a new garbage truck, or a new printing press, or a new dry cleaning facility, all those people who make those things are then having to work overtime. Those suppliers are now having to add more people, and you can see how this begins to ripple through the economy.
Absolutely, absolutely. Now, we're talking about economic growth.
Yeah.
I get that. I see it. We're already seeing good paying jobs open up in areas of central Illinois like Decatur that had 11% unemployment not too long ago. Now, Caterpillar is expanding into Decatur. ADM still hiring good paying jobs. Many other companies, large and small, are growing in communities that were just devastated by high unemployment numbers recently. We have the lowest level of African American unemployment in recent history right now. These are good numbers, but there's still a lot of folks out there that are uneasy about the tax bill, because I believe it's because change is tough. And many of the charitable organizations are concerned that because we've now raised the standard deduction by doubling it, that they're concerned that they might get less people donating to charity. Answer that concern for me.
Yeah, I've actually looked back on the history of charitable giving, going back over the last 25 years. There's no relationship between the charitable deduction, if you will, or the amount in which people pay, the rate in which they pay taxes, and the amount of giving. It really has to do with the health in the economy, the health and incomes, and how people feel, how prosperous they feel. That makes them more charitable. It's not about how much they can give away on their taxes. In fact, as tax rates have come down over the last 25 years, really since the Reagan administration in 1981, charitable giving has been going up, all while tax rates has been going down. So that as tax rates go down, the value of your deduction goes down with it. But all the while, giving has been going up.
Because
people feel more prosperous. And I think that's really the key. And because we have a tax plan that's going to make people more prosperous, I think you're going to see charitable giving go up.
Now, when you look at charitable giving, the individual side, I agree with you. If you make more money, because wages are going up, and wages have been stagnant for years, now we see them going up. You see better opportunity for you and your family to make more money, have a better prospect, a long-term, good-paying job that provides retirement benefits, provides health care benefits. You're going to feel more secure making that donation to your local United Way. And your statistics show that, correct?
Yeah. Oh, by the way, the Tax Foundation is a charitable organization. I'm not sweating bullets over this. I'm not worried. I think that if you have a charitable organization that does valuable work, people will continue to give to you because they believe in what you do, not because the tax code tells them to do it. I think that's ultimately what it is.
Well, let's look at, I'll use Caterpillar as an example. In and around Central Illinois, Caterpillar's Employee Foundation gives large amounts of donations to many different charitable organizations throughout the district that I serve. And do you have statistics that would show that when it comes to the corporate foundation giving, that when they are more prosperous because we've got a tax code that incentivizes them to invest in America, that you're going to be able to see those foundations be able to grow and give the larger donations to local charitable organizations, which we've seen when stock prices of major global companies that we want to invest in our district and in our region, we've seen those stock prices go down. What happens? They cut their charitable giving. But when they're going up, they increase their charitable giving, and it increases opportunities for local organizations to be able to get those large contributions, which in turn allows those organizations to do what they do best, help those who need the help in Central Illinois. So, in one other aspect, I didn't know if you looked at this. I look at me because I itemize, and I wouldn't know what deductions I could itemize if I didn't do that. But I'm only one of 4 people in my district that do that now. Right. Now, when we have a new postcard, we're actually going to allow people to see the top 3 deductions. Charitable organization, charitable deductions, top 4. Medical expense deduction, charitable contributions, home mortgage interest deduction, and property tax or state and local taxes. We're going to allow them to see those. Now, wouldn't you think now that 100% of the eyes of taxpayers rather than just 25% will now be able to make a simple calculation to determine if they should itemize those four versus keeping the standard deduction. And maybe if they give a little more, they might not owe Uncle Sam as much.
That's true. That's true. But simplicity is a big part of this, and I think that, as you point out, being able to do your taxes on a postcard or a small form is such a relief to too many people. We did a lot of polling and saw a lot of polling before the tax bill was passed, and what bothered people most was not necessarily the burden. They don't like the tax burden, obviously, but it's the complexity of the code. It's the fear of being audited. It's the fear of having to then go pay somebody else, whether it's TurboTax or your local accountant to do your taxes because you're afraid of making a mistake. We're taking a lot of that fear out of the tax code by making it simpler.
Well, one other issue I want to bring up that gets a lot of attention. A lot of the opposition to the tax reform on the Republican side of the aisle was because there's a limit now to the state and local tax deduction. You know, Illinois has been considered a high tax state, and after legislators in Springfield raised our state income taxes 32% last year, why should the federal government stop incentivizing them to do so by limiting the state and local tax deduction? And when you look at a district like mine, how does that impact the taxpayers in my district who, again, only 1 in 4 even itemized, and likely an overwhelming majority of those that did itemize would benefit more from the doubling of the standard deduction. Mm-hmm. So explain to my constituents why this tax bill is a good deal and why those limitations need to be put in there.
A lot of it's about fairness. And the previous system wasn't fair. Someone who earned the same amount that you do but lives in a high tax place in New Jersey got a bigger tax deduction than you did simply because they paid higher taxes, which meant that their politicians could raise taxes ever increasingly and pass some of those costs off to Uncle Sam, because essentially the federal tax code was subsidizing those high tax areas. That subsidy has been limited, and so it's now even. It's fair across all jurisdictions. Everywhere has the same limitation. So it's going to force a lot of those legislators and lawmakers and governors and what have you to be a lot more prudent about the kind of tax policy. So hopefully the folks in Springfield will get the message. It's time to start reducing taxes. But also, folks in the politicians in high tax areas outside of Chicago, they're charging $25,000 property taxes. They may have to start being a little bit more prudent in scaling that back.
Like we are downstate.
Right, exactly. So you found efficiencies downstate. You have a more efficient local government that doesn't cost as much. Why should you have to subsidize someone who does live in a high tax area where they haven't been as prudent or efficient? And so a lot of this is just simply about fairness. But getting back to your point, doubling the standard deduction, expanding the child credit, and some of the other improvements that were made for low and modest income people are far more beneficial than any loss of that state and local tax deduction.
Well, when you look at the district that I serve, the 14 counties in central and southwestern Illinois, you'll see that less than 10% of my constituents actually were able to have a higher rate than $10,000 in property taxes and state and local taxes combined. And many of them, very high percentage of that 10%, will benefit more from the doubling of the standard deduction. And we always forget to mention the reduction in the overall tax rates. We now have, everybody says 7, I like to say 8, because there is a 0 tax bracket.
That's right.
You are taxed at 0 for the first $12,000 and the first $24,000 you make if you're filing jointly because of the doubling of the standard deduction. Then you go to 10, 12, 22, 24, 32, 35, 37.
Wow, that's good.
Well, got to make sure.
I'm a tax guy. I actually remember all of them.
Well, I get asked at home if I've read that tax bill, and I'll tell you, the PDF I had 1,097 pages.
Yes.
But if you want to be efficient, start at page 510.
That's right.
Because that's when
it's in English.
Yeah, that's when you get past the bill and the legalese, and you actually get to what was introduced in the House in plain English, what was introduced in the Senate in plain English, and then what was agreed to in the conference committee, which is the final language. Start there. It's about 500 pages. Take a look at it, because it will give you, I hope, the same comfort that Scott and I have in making sure that this bill, this historic generational tax reform, is good for the constituents that I'm blessed enough to serve in the 13th District of Illinois. And I got one last bonus question. I always say, and I think I've heard you say it before too, this bill's not perfect.
Nope.
So, as we move forward, what was your number one issue that you think we still need to address?
Permanence. There were too many elements of this bill that, because largely of Senate budget rules and some of the gimmicks that had to be used, were made temporary rather than permanent. And many of the individual provisions in particular expire after 2025, and the expensing provision that we talked about that was so important economically expires after 5 years. We need to make those items permanent, because that's where you get the long-term economic growth. Unfortunately, a lot of the growth potential of the plan was limited because of these temporary provisions. Making them permanent will really give taxpayers and investors and businesses a lot of confidence, and that will keep that economic growth going long into the future.
Well, I agree. You know what I'm going to do? I'm going to introduce a bill to make all of those rates permanent.
Fantastic.
To get the same growth potential that you talked about. You mentioned the Senate. You know, we had to do this bill because we got zero support from the other side of the aisle.
Yeah.
Even though they had conferees around the conference table, it was a bipartisan committee that these bills went through when they were written. Every member of Congress had a chance to vote on this in the floor and read the same bill I did. Matter of fact, I used to have members of the other party come up to me on the floor asking me to sign letters to keep certain provisions in place. That's having a say in legislation. Just because you vote no doesn't mean you didn't have a say. I'm concerned about the Senate processes. We've had to do this through budget reconciliation. And when the bill left the House, they were permanent, right?
Yep, they were.
And because we couldn't get 8 Democrats at the time to sign on, we had to take those provisions out of permanence.
Yeah, to give you an indication of the difference between a permanent tax relief or tax reform and temporary, when we scored the House plan and looked at the long-term impact on the economy, it would have boosted the size of the economy by about 4.5% over the next decade. Unfortunately, the final bill, because so many provisions were temporary, only boosted the long-term size of the economy by 1.7%. So look at all that growth that was left on the table, in large part to accommodate these very arcane Senate budget rules that really, the irony around these budget rules is they were designed to prevent gimmicks. Instead, they created gimmicks and led to bad tax policy. And it's, unfortunately, American taxpayers and the economy are the losers because of it.
Explain to my constituents the reason why we needed 8 Democrats to break a filibuster or threaten filibuster.
Yeah.
Right?
That's exactly right. That under Senate budget rules, on a normal basis, you need 60 votes to pass something to avoid a filibuster. But because you used the reconciliation process, you only needed 51.
But we had to use it.
And had to use it because of Democratic opposition. The other thing is that the Senate has this rule called the Byrd Rule, named after a former Senator, Robert Byrd. And the whole point of that bill was to prevent tax bills like this from increasing the deficit beyond the next decade. Instead, what it's done is it's led to these gimmicks like sunsetting tax provisions before the next decade. So it's led to all of this bad tax policy, all to sort of try to prevent gimmicks in the future. We need to scrap all that. We need to think about tax policy in permanent terms, what it's going to do to the long-term health of the economy, and try to avoid these kinds of gimmicks. And sadly, we don't seem to have the support in the Senate to get rid of some of these nonsensical rules that they've created for themselves.
Well, a lot of them are a lot of them are traditions. You know, Mitch McConnell has a choice. He can say that we're just going to rule by majority. It would break a long-term tradition, but that tradition was broken by Chuck Schumer in the past on judges and other confirmation. So there's been precedent set. Or he can require whomever is threatening to filibuster to get up on the Senate floor and filibuster.
That's exactly right.
Get up there and talk as long as you can, but when you're done, you don't have that 60-vote margin anymore.
But look, the Kennedy tax cuts, which cut the top rate on individuals from 90% down to something like 70%, were done without these same Byrd rules and other gimmicks. They were made permanent policy. They went a long way toward promoting growth in the 1960s. Even the Reagan tax cuts were passed without some of these things, and with a lot of bipartisan support. It's been done before, it can be done again, but I think right now we're in a situation where the other side doesn't want to play along.
Well, I appreciate you being here. I hope we can do it again.
This is fun.
You know, as we move forward with the tax bill, we want to see the positive effects, but we also want to hear from you. Please, let us know especially when we get into February. The IRS has already sent out new withholding tables.
Yes.
For employers.
You'll see it immediately.
You will see it in your paycheck in February. If your employee is required to withhold less money because you're going to owe Uncle Sam less money, that means your check's going to go up. Look for it. We're excited to see that happen, and we're excited to be able to live up to a campaign promise and a promise that many of us have made, and we are seeing now that promise has been kept. So thank you for your time, Scott. Appreciate the opportunity.
Appreciate it.
And thank you, everyone, for joining us.
Thanks again.